Good morning, all of you. So, today we will start with the topic Introduction to Compensation and Reward System. What are the prerequisites for it? We have to understand the concept of human resource management, to understand the concept of job analysis and job description, to understand the business strategy to attract and retain the best talent. What are the objectives of this session is going to be? We are going to discuss the importance of compensation, to discuss various forms of compensation, and to understand pay model with three main components. So, compensation, how does it matter? Compensation does not mean the same thing to everyone. It is a different perception for different types of people. Like we have here, it is different from the point of view of society, stakeholders, managers, and employees. So there are four different perspectives of looking at the compensation. Like society, some people view pay system as a measure of justice. Comparison of earnings between men and women highlights what many consider inequalities in pay decision. So society should view pay system as a measure of justice. We should make sure that there is no inequality in the pay decision based on the gender, because it is what will be viewed as a measure of justice in the society. Benefits may also be seen as a reflection of equality or justice. How are we paying the system? How are we having a pay system will definitely define the society's reflection of how is it considering equality or justice. Job losses in a country is partly a function of labor cost. Now, stockholders. Some stockholders say using stock to pay employees create a sense of ownership. Others argue it dilutes stockholder wealth. So that's the way perception of stockholders. They feel that if we pay employees, they create a sense of ownership. They also have a particular interest in executive pay. Linking executive pay to company performance increases stockholders' returns. Now, how managers can influence compensation? It influences manager success in two ways. First, it is a major expense. Compensation obviously is one of the major expense of any organization. So obviously the manager have to look at that point of view that whatever compensation we are deciding, that is not having too much cost implications, and we are not having too much expenses on it. Obviously we have to see that compensation has to be designed in a proper way, but it should not be a major expense. Secondly, whatever the compensation we are deciding, it will be a major determinant of employees' attitudes and behavior. Because the compensation, whatever we are framing, whatever we are designing for our organization, it determines how is going to be the employee's attitude, how is going to be the employee's behavior. Talking about employees. For employees, pay is obviously a major source of financial securities. Why do employees need compensation? They need compensation because they see as it a return in an exchange. They feel that if they are working as an employee in the company, they are giving their service, so they have an entitlement for that. They take it as an incentive to take or stay in a job, and also they want to perform it well, so that if they perform well, they take more compensation, and they also take it as a reward because they feel that if the compensation is good, they will feel motivated. It's a like reward for them. So that's what we feel like, or we had discussed here, that how compensation is having a different meaning from the different perception. What is compensation? All forms of financial returns and tangible services and benefits employee receive as part of an employment relationship. Compensation is not just what the salary an employee gets, but it is whatever benefits, whatever financial returns, tangible services the employee get because of their services and their jobs what they are rendering being an employee in the organization. So that's what the definition of compensation is. What are the different forms of pay? Forms of pay are categorized into two ways. First, we have total compensation, which is paid received directly as cash and indirectly as benefits. When we pay directly in terms of cash, obviously that's known as salary, and when we consider it as benefits, maybe like work-life balance, maybe like allowances, insurances, so which are being paid indirectly. Now, what is relational returns? They are psychological. Like relational returns are those when you get a good recognitions, when you achieve something good, when you feel motivated, when you are having job satisfaction, when you feel committed to the organization. So that's what the relational returns are. So forms of pay basically are categorized in two ways: total compensation and relational returns. Talking about the pay model. Pay model, it serves as both a framework for examining current pay systems and it's a guide for most of the text. Basically, it works on three aspects. What are the policies of an organization? What are the techniques an organization use? And what's the objective? So basically, an organization has four objectives: efficiency, fairness, compliance, and ethics. So when we talk about efficiency, we mean to say how our organization's performance, how is the quality being maintained, how is the customer satisfaction level, stockholders, and how are the cost control in an organization. So that's what the objectives. Whatever is the objective, these all performance, quality, customer, stockholder, they results in an efficiency. How fair is the system? Are we having any biasness towards anything? Or our pay system having a fair policy? Whether we are complying with the rules, with the laws, and are we having all the ethics? We are following the ethics, we are following the guidelines. So these are the objectives. Whenever any pay or any compensation is being designed, we have to keep in mind what are the objectives we are going to serve. Talking about policies, how the compensation is designed, it depends on four parameters: internal alignment, competitiveness, contributions, and management. Talking about internal alignment, it means that how much is the value of a job, or how much is the worth of a job, and how much is it contributing to reach an organization goals and objectives. So that's what the meaning of an internal alignment. Now it can be determined either through work analysis, through descriptions, through evaluation or certification, and through internal structure. Now competitiveness. If we decide our pay system based on what our competitors are paying, we mean to say we are having a policy of competitiveness. So first we will use the techniques like how is the market definitions, we might do the survey, we might have policy lines, and which will going to define our pay structure. Next is contributions. Are we considering employee contribution based on their seniority level, based on the incentives what they might be getting, or based on the merit what they are doing? So we can design our pay for performance, whether it's like some companies, they like to pay for performance based on the seniority. Some might take it as a criteria, they keep it as an incentive wherein they have to achieve some targets. And somebody might like to see how was the past record of that particular employee. So that's where we are going to measure contributions. Now talking about management, how is the management role in the pay model or in the designing of the compensations? Whether they are looking on the cost side, they are having a proper communication, and they want to be a change in the market. And once it is done, we evaluate it. So that's how the pay model works. It works on policies, techniques, and objectives. So these are the references from which we have done our presentations. Thank you, students.